focus to Asian Paints, the company reported steady Q3 numbers. Joining us on the show is Mr. Amit Syngle, MD and CEO at Asian Paints. Mr. Syngle, tell us what is the reason behind the inline numbers and what is the outlook going forward?
So we had a relatively good quarter as we see it, given the demand conditions and the prolonged monsoon and a shorter festive season which was going on. We recorded at overall coatings level value growth of about 4.4% and a volume growth of about 8.3%. The decorative segment had a overall value growth of about 3% and about a volume growth of close to about 8%. So overall, what we saw was that we saw a shorter festive season, which was the first fortnight was good, but it was very, very short. And therefore, October was not very great in terms of what we saw. But November and December, the volumes really have picked up. And that is something which has kind of shown in the results. The other area which has kind of done well is our industrial, division. Both the auto OE refinishes segment as well as the general industrial segment has done well for us, recording more than mid-teen growths to that extent. So I think it has been very strong, both from the top line and profitability point of view. So has been the B2B business, which has also grown much faster than retail in terms of what we see. The global business also has done fairly well in terms of looking at logging a strong top line in terms of about close to about 6.5% and a strong bottom line overall. So what we see is that I think all across, while the demand was muted, I think respect to that, the performance has been still very strong, both from the point of view of volume and value.
All right, Mr. Syngle, afternoon. This is Shrishti also joining in. Good to know about your decorative business volume growth. It was a solid 7.9%, in line to what the street was expecting, and even the value growth at 2.4%. This number seems good, but if you can help us with some more understanding on the pricing environment. Are you seeing any pricing pressure that is emerging for this segment specifically?
So overall, what we see is that, we need to take the overall coatings growth, which was at about 4.4% in terms of value, and the volume was about 8.3%. So I think both those numbers are relatively good as we see it. We don't see any pricing pressure, so to say. We have had also some deflation in this quarter in terms of what is there. And we feel that today going forward, we are on a right path in terms of how we are galvanizing the business, both from a point of view of retail, B2B and industrial businesses.
Okay, and Mr. Syngle, let's talk about your margins. They've come in at 20%. Earlier, you had guided for 18 to 20%. So this time, in fact, your margins are at the upper range of your guidance band. On that note, would you want to further revise your guidance upwards?
So overall, the consol margins were at about 20.1% in terms of PBDIT, almost a 90 BPS gain in terms of what we have seen on year to that extent. So I think the performance has been very, very strong, despite the fact that we have made strong investments from a point of view of building the brand, marketing spends, and so on and so forth. However, I think there has been a very, very strong work from a point of view of really revisiting the entire cost structure and looking at seeing in terms of what we can get out of our formulation efficiency, sourcing efficiency, so that the entire cost framework, which we have been able to kind of galvanize very, very strongly in terms of going ahead. Apart from this, we also had a small deflation of about 1.1%, which has also helped us overall in terms of galvanizing the margins as we have kind of gone ahead. The margins all across the businesses have increased, whether it is industrial, whether it is B2B, whether it is the global business. So all across, I think it has come in terms of giving us this 21.1 PBTIT margins. Going forward, we would like to retain the same guidance in terms of the 18 to 20%, which we have maintained, given the fact that we would like to kind of really invest in the market and really see how we can galvanize the demand further.
All right, we'll watch out for that. But specifically, if you can talk to us a bit more about your industrial and international business, what's the outlook going ahead, and if you can help us with some growth numbers there?
So the industrial business for the last about 3 quarters has been doing fairly well. This year also, both industrial businesses of ours have grown at more than 16% in terms of value terms, and the profitability has been also strong. As we see is that given the large investment which is taking place by the government with respect to infrastructure, also from a point of view of a lot of private capex which is coming into the market, we see that this is something which is definitely going to be strong in terms of times forward. We also see the resurgence of the auto industry, which has given us some wings in terms of the industrial OE business, which we do overall to that extent. And going forward, I think this is a trend which is going to continue.
Okay, Mr. Singhal, we're in early days of quarter four. Talk to us about how demand has shaped up so far for this quarter, and if you could talk to us about what is the mix between rural and urban demand, how is that shaping up?
So what we have seen in this quarter, actually, given the fact that there was a festive season, although short, the rural markets have grown slightly faster than the urban markets in terms of what we have seen, especially the T3, T4 set of cities. They have definitely grown faster. Although what we have seen is that from a point of view of urban centers, I think there has been more push from a point of view of premium to luxury product selling to that extent, which is happening. But all the more, the demand has come in slightly more from the rural centers. The B2B business has done much better from a point of view of the urban centers.
All right, Mr. Singhal, with this, we let you go. So good having you on the channel today. Thank you so much for your time. All right, so that was the management of Asian Paints talking to us about what did really pan out in the quarter gone by. But going ahead, no plans as such with respect to the price hikes is what they are indicating. Even the stock is down almost 4% as we speak. The time now to slip into a very short break. We'll be right back.